The crux of the matter is China's position in the gold market. India is another country that has large quantities of bullion housed in jewelry. China is just one of many. The majority of China's public gold is also used for jewelry. Russia is another country to consider. Two Russian sovereign wealth funds are believed to contain a combined 10,000 metric tons of gold, according to reliable sources. The Russian central bank, meantime, has increased its holdings by another 2.3 thousand tons. All five central banks from the BRICS and the Shanghai Cooperation Organization are also at your disposal. Along with that, they probably have sovereign wealth funds. All of this points to the fact that our liquidity is quite low. I don't think it's overbought. It is impossible for COMEX to be overbought based on the open interest alone. The most remarkable thing is that the majority of this increase in gold and silver prices has occurred during a bear market. I mean, those crazy shoppers just going in and purchasing it all. Plus, there's an entirely miscommunication. On the subject of gold itself, I mean, there are plenty of gold bugs who are constantly spreading rumors about how it will do this or that, or how it will go to the moon. Really? Do they have any idea what they're discussing? I mean, it's obvious that they want to look at charts. Plus, they have this irrational belief that gold is good because government is bad. I couldn't even begin to get the gist of the game on that level of quality. It all starts with the Romans, who defined final settlement and deferred settlement, so the argument goes. Settlement in metal, which does not include counterparty risk, was the last option. The earliest Roman laws were enacted in 448 BC, and one of their key points was that settlement is metal. A pound of metal was the primary unit of measurement, called the ice back then. Naturally, gold followed later on due to its many advantages, such as its relative ease of usage. It was also getting a little more attention. You may say that there was a small amount of quantity. For those who choose to return to traditional economics, it could serve as a means of temporarily storing one's labor. Everything else, however, is settled at a later date. It's an assurance. It's an assurance of payment. The idea that you're paying a worker to paint the outside of your house can cross your mind, and you might even go ahead and pay him. However, this is not the final settlement, because you have likely paid in cash, which means that the counterparty risk is with the central bank, or otherwise via a bank transfer. To rephrase, you have essentially substituted one type of postponed settlement for another. These days, no one handles ultimate settlement. However, a decline in the value of the currency occurs whenever there is a decline in trust in its worth, which is the primary indicator of economic health. Yes, it is precisely the situation that exists. Therefore, the notion that gold may be bought and sold is false. It is completely unrelated. The connection between faith-based fiat currencies and gold is really what we're examining. Just like that, it's done. Is this where we are now? We can confidently state that the purchase power of gold has fluctuated relatively little throughout millennia. And there's a lot of proof for that. However, fiat currencies are transient. Just to put it simply, they don't remain for very long. The dollar has been a fairly stable currency for a long time, probably since 1933, right before the devaluation from $20.67 to $35 per ounce, if that makes sense. More precisely, and perhaps more visibly, since 1971, when the Bretton Woods Agreement came to an end, or was temporarily suspended. We have thus far had 54 years of pure fiat money. However, devastation began much sooner than that. Therefore, we simply keep it in mind. The gold market is a warning sign that that age is drawing to a close, in my opinion. Whoever is left with the fiat baby is basically going to have it. It will come to pass in that way. Thus, I believe that provides the context. Curiously, the Chinese, who tend to be a bit traditionalist when it comes to these matters, were not exposed to the teachings of John Maynard Keynes in their economic education, etc. After leaving communism, they were under the impression that capitalism would eventually collapse, and the money supply would collapse as a result of capitalism. Shortly after Mao Zedong's death, they began to seriously amass gold. Also, I have an English translation of the 1983 laws that established the People's Bank of China as the exclusive custodian and purchaser of China's gold and silver holdings. This is of the utmost importance. This is crucial information to have. The second piece of information is that until 2002, no one in China could legally own gold. At that same moment, the Shanghai Gold Exchange opened, making it easier for the general people to purchase gold. Thus, there was a time when the Chinese government owned gold, from 1983 to 2000. So, from where did it originate? Between those dates, the market had a severe downturn. On top of that, it was obvious that a significant amount of central bank gold housed in the West had truly disappeared, never to be seen again. According to Frank Fenerosa, the ballpark for this is between 10,000 and 14,000 tons. What this means is that a significant portion of the central bank's gold, about one-third to half, was sold into the market and will not be returning. At this point, Fenerosa reasoned, it was likely a necklace for Asian ladies. It seems to me that there's another tale. There must have been someone from the People's Bank of China discreetly snatching it up. I am making an educated guess here. I do not yet have concrete numbers. And I must admit, the issue about the gold market, which is obvious to everyone, is that no one likes to admit they have any physical gold in their possession. Their goal is to maintain its secrecy. People aren't the focus here. I'm also bringing up public administrations. Everything revolves around this. Example number one is the United States government. Their actual gold holdings remain a mystery to us. Their words are what? Completely non-existent. In terms of China, I estimate that they had amassed about 20,000 tons between 1983 and 2002. Naturally, the Chinese government has kept buying gold ever since. Moreover, the mine's output is close to 10,000 tons. China, which had previously invested heavily in its own gold mine production, quickly overtook South Africa as the world's leading producer, a situation that had occurred in the late 1990s and early 2000s. Another issue was that, state-owned refineries were really importing ore from other countries. Imply and Mongolia is a prime example, paying for the ore. What happened to the gold remained in China. China is like the Hotel California in terms of the connection between gold and China. No trouble at all with it coming in, but it just can't seem to get out. Therefore, that is the policy. This policy is why the Chinese have adopted this approach in recognition of the value of gold. Over 27,000 tons of gold have been delivered into private hands since ESG began. The vaulting system would have gotten part of that back as scrap. Because it will simply be used somewhere, I couldn't care less. It will remain in China. No one ever has. Plus, there are the banks to consider. For customers who put money into the banks, there are gold accumulation schemes. Plus, the Shanghai Gold Exchange is not the point at which this gold is transported. The Shanghai Gold Exchange is where it is kept. Because of this, we have no idea how much gold is present. It seems like a lot to me, though. I estimate that it will be around 10,000 metric tons. For the most basic reason that the household savings rate is over 30%, I think that might be an understatement of the situation. On an annual basis, that amounts to $5 trillion. Now, it used to go into such things as off-plan apartment developments, but those days are over. Forget about that. Perhaps a little, but I don't see much interest in the stock market. Seriously, though, the other thing you've noticed is that for the past year or two, the People's Bank has been lowering its major interest rates, which the bank has been matching. Mostly it's been building up as deposits on bank accounts. So what exactly does a housewife do all day? The way it works is that for less than $100 or $500 yen, she can create a gold accumulation plan. This is hence critically crucial. In my opinion, when all factors are considered, the overall amount of above-ground gold reserves is somewhere around 75,000 metric tons, out of a little under 200,000 metric tons. The demand side will be examined next. Nothing has changed so far because no one is interested in purchasing gold. I mean, come on, no money manager makes a living by placing his clients' money into gold. He would want to invest them in something that will yield him a somewhat higher return. Not only that, but he has the support of the regulators. Physical metals, according to the regulators, are not regulated investments. Nonetheless, this is precisely why ETFs were established, to circumvent that relatively insurmountable legal barrier. However, exchange-traded funds, ETFs, are starting to expand, and investors are putting money into them, albeit slowly. On the other hand, Something that is crucial from a demand perspective is that analysts at big US banks are now stating that they believe females are going at 4,000 for whatever reason. My first impression is that they are completely ignorant of the subject at hand. These banks, Goldman Sachs, Bank of America, Citibank, Citicorp, etc., and their investment managers, who are usually in charge of or oversee assets worth more than $1 trillion. This is evident from the fact that they are making this claim. Huge sums of money are at stake here. None of theirs are available. In fact, I have my doubts about their ability to get it. Such that, well, it's fascinating. It is believed that portfolios are valued over $300 trillion when one considers the entire investment management universe worldwide. 300 trillion. You can assume a few things about the storage of bullion and the like based on your examination of exchange-traded funds, ETFs. But that's about it when it comes to owning gold in that context. It's a fraction of a percent. The actual amount in gold is less than 0.5%. Still, these American behemoths are starting to think, oh, we should probably buy some of this. Oh, to put it in perspective, my China story implies that there is likely somewhere around 40 to 45,000 tons of silent cash, including the jewels in the West. That's the end. End of story. We have access to the vaults and can view their contents. The contents of the Swiss vaults are invisible to us. It's something I'm not familiar with. If someone could just give me a number, I'd be over the moon. But for some reason, I don't think the Swiss make these kinds of numbers. Personally, I would assume that. The upshot, though, is that 25,000 tons would be required at present pricing for a 1% increase in portfolio allocation of those 300 trillion. Can you tell me where it will originate? I mean, the short version is that the world market is about to experience its worst crisis ever. The same logic applies, yet the numbers are much different for silver due to its status as an industrial metal and other factors. The liquidity is severely lacking, which is why it is currently climbing at $1 a time. We are putting a strain on the system. This is really grave, you know. And I get it. I can see how your gambler could sell $1,000 below the present price and regret it later. I get it, but the part he's leaving out is that he'll be unable to participate in the largest, most intense squeeze that the market has ever witnessed. I believe that's the direction we're moving in.